Hi, in this video, I will show you a trend following strategy that was shown by Aaaj for Kal in his YouTube channel. This strategy will basically be an intraday strategy that I will run on a 15-minute candle. But as per his video, we can do this same strategy on a 5-minute setup, on a weekly setup, on a daily setup, and on different indexes, different instruments as well. So we'll first learn about what exactly is this strategy, what is the logic we are trying to follow. Then I will show you how you can duplicate the strategy I have built in your Tradetron account and run it on paper trading completely free of cost. And finally, I'll show you how I have built this strategy, what are the keywords, what lists have I used, so that you can also build these kind of strategies yourself. So let's directly first understand what exactly is this strategy. Now to understand this logic, I have the YouTube video of Invest Aaj for Kal. Now in here, what he's discussed is that we are basically going to look at a technical indicator called 10 EMA on the 15-minute chart of the index, which is Bank Nifty. However, in my strategy, I have basically made a list where I will be using Nifty and Bank Nifty both, and I will be trading in futures as well as hedging it with options. Now you can choose to use the same strategy on different indexes, like let's say Sensex, BankX, Midcap Index, FinNifty and so on. Since I wanted to backtest this strategy, I've selected only these two indexes for now. So the strategy is what is shown in this video is basically a trend following setup, which is an intraday setup where we are basically looking for a candle for a long trade. So there are two different types of trades. One is a long signal, one is a short signal. So for the long signal, our objective is basically to find a candle which is a red candle and it is trading above the 10 EMA line. So if the candle is trading above the 10 EMA line, then we are assuming that candle to be that trend to be a bullish trend. And if let's say there is a red candle, which means that there is some defiance of that bullish trend, and immediately at the very next candle itself, if there is a breakout above the high of the red candle, in that case we are basically going long in our setup out here. Now we are doing the exact opposite for a bearish setup. So in case of a bearish setup, we are basically finding a candle which is basically trading below the 10 EMA line. So the highest point of that candle has to be below the 10 EMA line. Now at this point we have to find a green candle, which means there is some strength that is trying to build up, but that strength build up fails and the price in the next candle immediately after the green candle falls below the low of that particular green candle. Now just to give you an example, if let's say we are looking at some kind of a long setup. So this is basically the 10 EMA line, and the candle frequency that I have selected for Bank Nifty is basically 15 minutes out here. Now in here, if you see these candles out here, we are basically, our first condition was to find a candle which is above the 10 EMA line. So if you see these candles, these are all above the 10 EMA line. Now our logic out here is basically to find a red candle. So if we come out here, this is the red candle that we have found. Now what we need to see is that the high of the red candle is basically being breached, and that red candle has to be above the 10 EMA line. So in this 1430 candle, I can see that the high that the candle is basically above the 10 EMA line, and at the same time the very next candle, which is the 1445 candle, basically is going above the high of this particular red candle. So in this case, it would basically trigger our long signal when we would basically buy a futures trade. So in this case, for Bank Nifty, we would take a futures trade at this point. Now, after taking a futures trade, our stop loss for this strategy will basically be the 10 EMA line. So if there is a closing below this 10 EMA line on the long side, in that case we are basically squaring off our trade, and we will now look at another long setup to happen, or we will look at a short setup to happen. So that is pretty much the idea. Now let's try and understand how you can duplicate the same strategy in your account. Now below in the description you will find somewhere that there is a link that is attached out here. Now when you click on this link, you will basically be redirected to a page like this, If you don't have an account, you'll first have to create an account, and then you will be able to see this page. Now once you are on this page, you just need to find duplicate button and you need to select duplicate, and once you clear the captcha, you will be able to duplicate this same strategy in your Tradetron account. Now once you duplicate the strategy, you can go to the My Strategies page out here, and you will find the same strategy within your Tradetron account. Now that I have opened this strategy, let's see how exactly can we build this strategy. So for this, we need to figure out a couple of things. So my first thing is that I need to generate a list. This is because I want to backtest this strategy based on two different instruments. You can of course not select a list and choose to run this only on one instrument, but it would be very tedious to do. You'll have to make multiple sets for that. So for this, I have basically made one list called Invest Aaj for Kal, and in my list, I have basically added two different instruments, which is Nifty and Bank Nifty. Now I can choose to add multiple instruments out as well. I can add, let's say, a Fin Nifty and BankX and Sensex as well as needed in this strategy. Now for the set 1, which is my long set, I am basically doing a couple of checks. So my first check at this point is that time has to be more than 9:30, that one candle data has to be there, and I want to check if the low of that particular candle for this kind of a setup, I want to check if the low of the candle is more than the EMA line. So if the low is here and the EMA line is here, in that case there has to be some difference between the two lines, which is why my signal will become true. So there will be some difference which will be captured in this particular condition out here. Now the second condition out here, which is my open has to be more than close. So if open is here, close is here, this means it is a red candle, and all of this has to happen in the -1 candle. So in my -1 candle, if these two conditions are satisfied, and if the LTP is more than the high of that particular -1 candle, in that case, I will basically be taking the trade. Now LTP will only come when there is a fresh candle, which is a running candle and a non-closed candle. So this will basically ensure that the next candle immediately after my -1 candle is basically giving me such a situation where this particular high is broken and the trade is taken. Now what trade am I taking? At this point, I'm taking a futures trade. So whenever my condition is true, I'm taking a futures trade of that particular instrument that I am checking my conditions in. So I will take a futures trade of the current month, and I will want to hedge that trade because a naked futures can be very difficult to handle, given that the volatility nowadays has been super high. So at this, to hedge my trade, I'll basically be buying a put option of the current week expiry, which will act as my hedge. Now along with this, I will also have my stop loss or my exit conditions. Now my stop loss condition is simple, that if my EMA is more than my close, which means that, let's say, if my EMA line if my EMA line is out here and the very next candle, maybe this candle, is basically closing out here and the close value is here, that means that there has been a cross that has happened, and because of this cross, I want to now I'm now getting a confirmation that the trend has changed, and because of that I will want to exit from my trade. Now I'm doing the exact same thing for my set 2. So in my set 2, I basically want to check for these conditions. Now these conditions basically as defined are that one, time has to be more than 9:30. At the same time, I want to check that the high of the candle, at this point I know that all my candles are below the EMA line. So I want to check that the highest point of that candle, the -1 candle, it is basically lesser than the EMA line. So the EMA line has to basically be more and the high has to be below that. So that is what I'm checking in this particular condition out here. The next thing I'm checking is that my close has to be more than my open. So if my close is here, open is here, this means it's a green candle. So I'm basically checking for a green candle, and then finally I'm checking that the LTP is less than the low of that particular green candle. So if it was a green candle and the LTP is less than the low of the green candle, which means that it tried to break out above the EMA line, but it failed, and now the price is going down. In that case, I am taking a trade. Now in here, I'm basically selling my futures, and to hedge my sell futures, I'm basically taking a call buy at this point. So that is the strategy that I have built. The same thing is for my exit. So in my exit, I'm basically checking if my close price is more than the EMA line. So that is the entire crux of the strategy. Along with this, I also have a universal exit condition that at 320, I will be squaring off from my strategy. And this strategy basically will reactivate every after 2 minutes. The next day, once my conditions are true, it will again start taking my trades. So I hope you like this video on understanding a strategy that I found on YouTube. I will link this video in the description as well, so that you can check out this video and make relevant modifications to the candles of the strategy, to the different instruments, and test it on different instruments on paper trade as you need it. I hope you like this video. If you want us to cover some other videos or something in specific in future videos, feel free to drop it in the comments, and we will be happy to take it up in future sessions. Thank you very much. Goodbye.